you're planning to buy term insurance, there's one mistake I would strongly recommend you avoid: choosing a policy simply because it has the lowest premium. Term insurance is ultimately about protecting your family's financial future. So in this video, I'm going to explain 7 important things you should check before choosing a term insurance plan. Let's first understand what term insurance actually is. In simple terms, term insurance provides financial protection to your family for a specified period. You pay a premium, and if the insured person dies during the policy term, the applicable death benefit is paid to the nominee, subject to the policy terms and conditions. The important thing to remember is that term insurance is primarily about protection. The first question is, how much term insurance do you actually need? A common rule of thumb is to look at a multiple of your income, but I wouldn't use that as the only answer. You should also consider outstanding loans, children's education, your family's future expenses, your existing investments and assets, and how financially dependent your family is on your income. So think of an income multiple as a starting point, not a universal formula. The second thing is the policy term. Don't automatically choose the longest term available simply because it is available. Ask yourself, until what age does my family actually depend on my income? If you have young children and large liabilities, your requirement may be very different from someone approaching retirement. The right term should match your actual financial responsibilities. Now we come to a very common mistake: comparing only the premium. Suppose one policy costs 18,000 rupees a year and another costs 21,000. It's tempting to immediately choose the cheaper policy. But the difference in premium doesn't tell you everything. You need to compare the coverage, policy conditions, exclusions, available benefits, and the overall suitability of the policy. In insurance, cheapest doesn't. The fourth point is the insurance company itself. Look at the insurer's claim settlement information, financial strength, track record, and servicing. Also understand how claims are actually processed. And one important point: don't select an insurer based on just one number, such as claim settlement ratio. It is better to look at the overall picture. This is one of the most important points. Don't buy an insurance policy without understanding its conditions. Look carefully at exclusions, suicide-related provisions, consequences of non-disclosure, premium payment requirements, and what happens if the policy lapses. You don't need to become an insurance expert, but you should understand what the policy covers. The sixth point is riders. Insurance companies may offer additional riders such as accidental death, critical illness, or disability-related benefits. These can be useful depending on your circumstances. But don't automatically add every rider simply because it is offered. Look at the additional premium and understand exactly what benefit the rider provides. Finally, look at how the premium will be paid. Depending on the policy, you may come across regular pay, limited pay, or single premium options. Don't choose purely based on which option looks cheaper initially. Consider the total cost, your current income, future cash flow, and whether the payment structure is comfortable for you. Before you buy, ask yourself, how much cover do I need? Is the policy term appropriate? Have I compared more than just premium? Have I evaluated the insurer? Have I read the exclusions? Do I really need the riders? Can I comfortably maintain the premium?